Now, thousands of patients in Zimbabwe will now have to pay cash after doctors declined to accept medical insurance. The main doctors association says insurers owe them over $200 million US.
Zimbabwe has more than 20 registered health insurers serving about 800,000 members. And that's according to the Association of Health Funders of Zimbabwe, AHFOZ, which represents health insurance firms. The Zimbabwe Medical Association, ZIMA, accused AHFOZ of failing to pay or delaying payments to doctors who were nonetheless forced to pay taxes and funds they had not received.
Doctors see patients, they accept medical aid cards, but a number of times they are either not paid or paid way after 60 days, or they get paid a very little amount which is not in line with the gazetted fees. Unfortunately, when they do get the little that they get, or they invoice the medical funders that do not pay them, ZIMRA, who are the taxmen, comes and demands their monies on those invoices.
Zimbabwe's health sector imploded under the burden of a severe economic crisis and hyperinflation nearly 10 years ago. Most doctors in Zimbabwe run private practices, and some also put in hours at private and state hospitals. Government-run hospitals used by the majority of Zimbabweans often lack basic medicines and specialist doctors and are largely shunned by patients on health insurance. Economic analyst Nelson Banya believes the current situation is likely to get worse if the economy does not improve.
Now let's get back here in Nigeria. A recent report by a research organization, Exotix Partners London, says there are positive developments in Nigeria's banking sector, but maintains that uncertainty remains. The report also updates earnings forecasts and valuations for Nigerian banks. Now let's talk to the author of this report, Ronak Gardia. Ronak is the equity analyst at Exotix Partners London. Good afternoon, Ronak. Thank you for joining us.
Good afternoon. How are you? Hello?
Now, what is this report all about?
Yes, so we've updated our earnings forecast following the bank's full year numbers and first quarter numbers and some of the recent developments. And like you rightly mentioned, we're seeing some clear positive trends in some of the profit drivers. Banks' non-interest revenues are recovering. We're going to see some pretty strong loan growth on the back of the devaluation. Banks have implemented cost-cutting strategies, so we're seeing operating efficiencies improve as well. But at the same time, there's a lot of uncertainty with regards to the asset quality in some of the vulnerable sectors like oil and gas, power, manufacturing, general commerce, and we are yet to see how that deteriorates and what impact that will have on banks' capital positions. But on the general, we do think the sector does seem fairly valued at this level, but there are some selective stories that are starting to look promising.
Now, in your valuation of the banks, your report indicated that GTB remains your top pick. That's in terms of valuation, followed by Zenith Bank. What have you seen in these banks?
It's primarily because of those banks' higher profitability profile, and historically they've been pretty good at managing their risks as well. So we do think, those two banks' asset qualities shouldn't deteriorate as significantly as the sector in general. But even if they do deteriorate, we think they should be able to absorb that, given that they have a higher profitability profile.
You recommended a sell for Wema Bank. Why?
Again, it's just on the other end of the scale of GTB and Zenith. Admittedly, their exposure to the high-risk segments of oil and gas, general commerce, etc., is less than average. However, their profitability profile is very poor. You look at their cost-to-income ratio, their margins, they're amongst the lowest in the sector. So even a slight deterioration in asset quality will push them into the negative. Apart from that, they're also in the process of repaying their capital lent to them by the central bank during the last crisis, which they then have to replace from market sources, which we think might be difficult given the current market environment.
Right. Generally speaking, what is your outlook for the banks in Nigeria?
I'd say cautiously optimistic following the devaluation and liberalization of the exchange rate. If we do see a fully liquid FX market and liquidity in the market, US dollar liquidity in the market improve, then I think the positives will outweigh the negatives.
Well, thank you very much for your time, Ronak. Ronak Guardian, he is actually the author of that report on Nigerian banks and, of course, the equity analyst at Exotix Partners London. And it's on that note that we draw the curtain on today's edition of the program. Thank you very much for watching. I'm Chimezi Obiwabo.